Financial repression disguises risk, but risk is there and it's building. Look at, for example, the Eurozone. We're seeing that the Eurozone is seeing some of the lowest yields in their sovereign bonds, sometimes in history, all-time lows. And this is happening just at the same time as the Eurozone slowdown worsens, as the economic data worsens, as the risk of rising imbalances, particularly rising deficits, is also quite evident. This is something that we need to address quite in detail, because when we look at the level of risk that the market is taking, we need to understand that if the allegedly lowest risk asset, the sovereign bond, is artificially expensive due to financial repression, to central bank injections of liquidity, what we are doing is actually disguising risk all throughout the risk chain, and that is also incremental. While the economic data worsens and also the earnings and ability to repay debt gets worse, what we cannot expect is yields to continue to be this way. But if financial repression continues to put yields at these low levels, we also have to understand that this is not something that is telling us that risk is very low and that things are improving, but rather that this is a sign of the investors taking shelter in allegedly lowest risk assets because they prefer to get back some of their money and look less at returns rather looking at safety in sovereign bond yields, because the perception of risk and slowdown, disinflation and Japanization is actually quite high. Thank you very much.